When's the last time you actually looked at your car insurance bill? And I mean like really looked into it. Like you questioned it, compared it to other companies potentially. And for most people, the answer is never, or it's been a while. They pay for it every single month and that's it. They don't even worry looking back at it. And they just assume that's it. It's set in stone. You can't get a different number. And that assumption is costing them hundreds of dollars a year. And in today's video, I'm gonna break down exactly how to lower your car insurance bill. And I'm not just gonna say the basic vague stuff like shop around. I'm gonna show y'all the actual moves in order that I would do that bring down your rate. So let's get right into it. So the first thing I need y'all to understand is how insurance companies actually price your rates. Because I know most people think that loyalty matters. Most people think if you're with an insurance company for 20 years that they won't screw you over. And guys, surprisingly, I know we thought these companies love us, but the answer couldn't be further from the truth. They reward risk profiles. Think about it. These guys are in the business to protect you in a car crash. So if you're more prone to getting into an accident, they're going to charge you more. What they're doing every single time that your policy renews is calculating how likely you are to file a claim. And based off that estimation, they're going to set a price based on that. That's it. If you haven't done anything to improve your risk profile and you haven't shopped around, then your rate is probably higher than it needs to be. The factors that actually determine your rate include your driving record, your credit score in some states, the car that you drive, where you live, and how many miles you put on your car per year, your age, and the coverage level that you're carrying on your car. Some of those you can't change, but a lot of them you can work with a little bit. So here's the first thing that I would start with. And this one is gonna be the one that has the most potential to lower your insurance rate. And that is starting to look around. Get 3 quotes from 3 different companies right now. And I'm not talking about changing some stuff on your current company or looking into discounts. Go to Geico, go to State Farm, go to Progressive, whoever you want to look at, and get actual quotes for the same coverage that you have right now. I'm telling you, most people who do this find out that they can get quick savings, and it's that easy. You can save like $50, $80, or even $150 per month just by switching. And you might be saying, Josh, $70, $150, that's not that much. Like, come on, if you're saving $150, that's up to $1,800 just for doing a simple phone call. Come on, if I told you I'm gonna give you $1,800 in your hand just for making a phone call, you would do it. Like, these things don't sound that big until you add it all up. And you need to be proactive. You need to take initiative when you're doing this, because your insurance company is not going to volunteer you that price information. They're not going to call you up and be like, hey Josh, by the way, we're a little expensive, so maybe you should start checking around. That's on you to do it. And the time to do it is right before your renewal, because most policies are 6 months nowadays. So every 6 months, you have a window to switch without getting any penalty for getting out of your insurance too soon. So put it in your phone, put a reminder, set it for 2 weeks before your renewal date, and check quotes to see if you can get any type of savings. And the next thing I'm gonna look into is my deductible. And your deductible is what you're gonna pay out of pocket before insurance kicks in. So it's pretty much the same thing as your medical insurance. Let's say if you have a $500 deductible, right? You get into an accident and you're gonna get back $2,000 because of what your car is valued. You have to once hit that 500, and once you hit that, then anything over. So you're gonna get back $1,500 cash because you're gonna take that $500 deductible. Hopefully I explained that correctly. For most people sitting with that $500 deductible, if you raise your deductible to $1,000, then you're gonna pay less per month because the company is giving you back less in the case of an accident. So sometimes this can be a significant saving. But here's the honest truth. Although you can never completely factor out an accident, if you're gonna be a careful driver and you drive, you follow the rules, yada, 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 you're probably not gonna be filing claims constantly. So that means you're probably paying a higher premium every month to protect yourself in a scenario that will probably never happen. And if you got $1,000 sitting in an emergency fund, which you should, by the way, you can more than likely absorb that higher deductible and pocket the monthly savings. That's money back in your pocket every single month over the span of potentially years of you not getting into an accident. So the next thing I'm gonna look at is discounts. And this is where I see people leave a lot of money on the table. Like, you'll be surprised How many people do not take advantage of company offered discounts? A couple of them include the low mileage discount. If you're a driver that doesn't drive that much, let's say you drive under 7,500 or 10,000 miles per year, a lot of companies will knock down your rate. If you're driving less, you have a less chance of getting into an accident. So everything goes hand in hand. You're gonna pay lower every month because you're less of a risk. Pay in full discount. And this means if you pay your 6-month premium up front instead of monthly, a lot of companies will give you a 5 to 10% discount rate off your total amount compared to if you just pay it every single month. Which, I mean, it's not that much, but it's worth it. Another common one is bundling. If you're somebody that owns a house, you have multiple cars, you can consolidate it with your car insurance. And that bundle is gonna take a good amount off. And it's usually like 10 to 15%, or maybe even more depending on your insurance provider. Where some companies, based on your driving history, if you have a clean record for the past 3 or 5 years, they'll give you a discount. A lot of times this is not something that's automatic, you have to ask for it. So if you haven't been asked about that good driver discount and you know you haven't got any tickets or any accidents on your record, make sure you ask that insurance agent about that. And also you got some companies offer discounts based on what you do for work, the application discount. Teachers, nurses, first responders, maybe if you're military, it's always worth this action. The worst they can say is no. And here's one thing that specifically applies if you're driving an older paid off car. And this is something that I actually think about with my TSX. This is something that I thought about actually. And the question you need to ask yourself is, do you really need comprehensive and collision coverage on your car? Comprehensive insurance covers things like theft, water damage, or trees falling on you. You can wake up one day and there's a flood outside. That's gonna be comprehensive. Collision covers you if you get into an accident. It's gonna cover your car. So let's say you're driving, you hit a wall, nobody else is there to blame. You can't go through somebody else's insurance. You have to go through your own collision. That's how you're gonna fix your car. Both of these are required if you're financing a car. So if you're somebody that's financing a car, just go ahead and skip this part of the video to the next, because if you're financing a car, you have to have full coverage on it. The bank is gonna always wanna protect their asset. But if you own the car outright and it's an older car, then you have a choice. And here's the calculation that I went with. You're gonna wanna go ahead and find out what your car is actually worth right now. How are you gonna find this? You're gonna go on Kelley Blue Book, Marketplace, whatever you need to do to see what your car is worth. And if the value of your car is less than 10 times what you're paying annually for comprehensive and collision, it's probably not worth carrying it. So you're better off just dropping those coverages and putting that money aside to save up. Worst case, you total the car, just go buy another one. And I want to be clear, because this solely depends on your situation. If you're in a place that's high theft, or if you can't afford to replace the car out of pocket, let's say you don't have that money saved up, you're living paycheck to paycheck. So if you were to cut and save some money every month by doing this, the money's gonna be going anyway. The math might look different for you, but run the numbers on your specific car. A lot of people are carrying coverage that isn't protecting them proportionately to what they're paying every month. So it's worth looking into this. In a lot of states, insurance companies are allowed to factor your credit score into your premium, and they will do this. A lower credit score is gonna mean that you're gonna pay a lot more for insurance rate versus having a higher credit score. So even if you are a perfect driver, this can low-key nip you in the butt. So if you were working on your credit, that's not just going to help you with the car loan, it can potentially bring your insurance rate down. It doesn't hurt to look into this, and obviously having a good credit score doesn't really have any cons to it, so why not? Car insurance is one of those monthly bills that can feel fixed. I know, been there, done that. Like, it's just what it is and there's nothing you can do about it. But that is not true. The rate that you're paying right now is not necessarily the rate that you have to pay. Every variable that I just spoke about in this video is something that it can actually affect how much you're paying every single month. So make sure when that renewal is coming around, go out there, get those quotes, ask about the discounts, run the deductible math, and do the old car calculation if it applies to you. And if you've done all of that, you'll be surprised. You'll probably save like $50, and that $50 is $600 a year. And over 5 years, that's $3,000. Every small thing adds up. I haven't done one of these in so long, bro. Just get out the car and walk around this John after the video. Boy, oh boy, how far have we come? And I guess how far there is to go. Literally haven't done this since I got the new plate. Ain't that crazy? You'd think I'd be walking around the car more. Now that we got the national branding on the back, we gotta get up close with that Zigiwik. A lot of people be asking how I record these videos. This how it goes down, y'all. But guys, I'm ending off the video right now on a little different topic than usual, because normally I just end it off. Something I wanted to say during this video is stay away from analysis paralysis, guys. It's something that plagues a lot of people, including myself. Look how many videos I uploaded in the past month. Come on, that is disappointing. I'm pretty sure there's somebody else that's going through a little rough phase. This nothing to be ashamed of. It happens. Like, life got in the way. I do have 2 jobs outside of making YouTube videos, so it kind of caught up to me, I ain't gonna lie. And I overanalyzed what I have to do versus what I need to get done. And what I need to get done, obviously, to work for my 2 jobs, and I need to make these YouTube videos. And this kind of got pushed on the back burner because obviously I can't lose the jobs, or I won't be able to financially sustain myself for the moment. I love making content. I love making YouTube videos, and I guess this is just my bad for not posting. And all we can do is go forward from here. So if you're somebody that suffers from analysis paralysis, or it got you in a chokehold, beat it. Always remember, we have one life, right? We're all gonna pass one day. This is all we get. There's no respawns, there's no retries. The one thing when I made this YouTube channel, I decided that for once in my life, I'm gonna take something to the end. I always start stuff and I don't finish it. And then I always wonder, like, what if? What if I trained harder in high school? I could have probably played college ball or something. If you go watch my earlier videos, that's literally what I preached about all the time. I'm gonna keep posting regardless. And I did. I posted every single day for about 3 months. And in the beginning, there was no reward. There was no views. There weren't all you beautiful people watching now. Like, nobody was there when I was pumping out content. So it was a couple OGs, Tampa Grandpa, and a couple others. Hopefully they're still around. I say that to say, even when you're consistent, even when you're dedicated to something, life happens to everybody. Everybody's human. You know, online, people like to just chuck it up as stop being lazy. Everybody's working harder. Why don't you? But I mean, life happens, bro. It is what it is. Obviously, my situation is very mild. I just got overworked and got burnt out with 2 other jobs on the side. But I mean, people have relatives that die. Serious stuff can happen and it'll knock you off your path. But the most important thing is you don't be a what if. And I'm gonna end it just on that, because I could talk about this all night, but as y'all can see, I'm not home. I'm right here and I need to go home and edit this video. So y'all, make sure you buy TSX and travel. And I'm gonna catch y'all in the next one. Be safe out there. Drive safe. Peace.